welcome to your trades. Tell us a kind of move we've seen. Is it we've seen a broad range of 200 points on Nifty. And banks were not participating much today, especially the heavyweights like HDFC Bank. What should we make out of it?
Hi, good afternoon, Priyanka. Thank you for having me on your show. See, I think Nifty and Bank Nifty, they are in the final expiry week as of now, and they're just taking a breather after the 2 days of continuous up move that we've seen. Nifty has a broad range, somewhere around the range level of 24,300 to 24,350 is acting as a resistance. Very aggressive call writers have positioned themselves today just ahead of the expiry. So any move above 24,300 in Nifty can take the short covering rally towards 24,500 odd levels. Now that is again going to be quite crucial. However, until that expiry gets over, it may remain sideways. The rollovers may take place in the range between 24,000 to 24,300 on a broader side. So I think that's the range that we can look forward to. Maybe the expiry December series, one can see it heading higher towards 24,800 odd levels, but that can only work out in the December series. Bank Nifty, although today it has underperformed, it still holds on to a comparatively better strength than Nifty because Bank Nifty is also consolidating in a 1,000 point range between 51,500 to 52,500. Now, there's very strong resistance of around 50 to 500, and it is a weekly resistance. So perhaps by Thursday or Friday end, if Bank Nifty is able to cross above the 50 to 500 mark on a weekly close basis, you can see a very sharp rally, short covering rally rather in Bank Nifty, which can take the index towards 54,000 on a positional basis for December series. So I think it is very important to keep a focus and radar in Bank Nifty with the support of 51,500. As long as that level is not breached on a closing basis, on a weekly basis, one can look to accumulate longs for Bank Nifty for higher targets of 53,500 to 54,000 in December.
Okay, Sony, thanks for that view coming in. So those are the levels that Sony is watching out for on the Nifty as well as Nifty Bank side. But Sony, a lot of the experts who've been joining us on the show earlier have told us that they believe that this is a stock pickers market. Do you concur with that view? And if yes, what stocks are you flagging off? Where are you seeing some pocket of value coming in amid a beaten down market like this?
Certainly, I think stocks have performed quite well because indices have been quite choppy. But however, indices have also seen a very strong recovery in the last 3 to 4 trading sessions. If we talk about stock specific, today the first sector that has shown very strong momentum is the consumption space. And one stock that is looking quite strong, which has seen a reversal, is Asian Paints. Now, Asian Paint has seen a very strong correction. It is reversing from the levels of supports of 2450 odd levels. You can see it reversing. So today it has given a close above a 2500 mark, which is an option chain breakout as well. So one can buy in Asian Paints in December series of a futures, and with a stop loss of 2490, 2480 as a good support, one can hold on to the stock and look for higher targets towards 2570 odd levels. So that's the first stock pick. The second would be in the pharma space. Now, pharma for the last 2 days, very strong momentum. You can see each of the pharma spaces, sectors and stocks absolutely performing quite strongly. So, pharma, we have a buy pick in Syngene as of now, which has given a breakout above 910. It's an option chain breakout. So, one can buy Syngene on small declines up to 9110 and keep a stop loss of 900. Look for higher targets of 950 for December.
Absolutely. The two stocks that you've recommended on the buy side. All right. So Syngene is your trade coming in on the buy side. Thanks very much, Sony, for that view coming in and the two recommendation for our viewers.